Hello, everybody, and welcome to the Debt Hotline. My name is Hannah Locklear with Team Solo, and we're super excited for tonight's topic because we're going to be talking about auto loan debt, cars and debt, and we have a very special guest joining us tonight. And I wanted to take a moment to introduce him. But thanks everybody for tuning in and watching and listening. If you're watching live and you have questions about auto loan debt or car debt, please go ahead and submit your questions on the live chat. And yeah, we're going to go ahead and jump right in. So, as I said before, we have a special guest joining us today. His name is Joshua Tatum. And I wanted to go ahead and read a little bio that we wrote up about him. So, Joshua is the co founder and CPO of Carputty, which is a fintech company that reimagines how consumers finance and manage their vehicles. With over 20 years of experience in consumer finance and product innovation, including leadership roles at SoFi and Guaranteed Rate, Joshua is pioneering tools like Flexline and V³ Valuation and Flex Loan at Carputty to help people treat their cars as assets instead of liabilities. His mission is to give consumers more control, transparency, and financial freedom in auto ownership. So, Joshua, thank you so much again for joining us tonight. And yeah, I just wanted to give you a minute to fill in any gaps that I might have missed on my end and let us know a little bit more about what you do at Carputty.
Hannah, thank you, and thank you everyone for joining. Yeah, as you said, I've spent almost actually over 2 decades now reimagining how consumers, keep and manage their own debts, everything from mortgage, student loans, personal debt, to now auto finance debt. The purpose of Car Putty, as you stated, is really to give that transparency back to the consumer, and I'm sure we will talk about how we do that and how it's in the best interest of those in your field.
I love it. Can you tell us like a little bit more about exactly how Carputty works for users?
Yeah, so unlike traditional lending, Car Putty is a platform that consumers can use to both manage and purchase their vehicles through our finance options, but also manage them through our dashboard utilizing our V3 valuation tool. The intersection of both of those allows the consumers to know exactly when to buy, sell, hold their cars, just like they would a stock. Unlike traditional lending, where it's a payment driven, like, oh, I want a car, I can afford $350 a month. We really look at holistically to make sure that you can truly afford the car. We use differentiated underwriting techniques, a bit of AI, and a bit of cash flow management to, again, to keep people out of bad situations.
What kind of like bad situations do you think Carputty helps prevent?
Yeah, so again, back to the traditional way. You find a car, you want to buy it, and then at the very last moment, they're like, "Okay, you need to finance it. Here's your payment." Everything's payment driven. So let's say, again, the old adage of $350 a month. Well, what do you actually get for that? Well, some people say, "Okay, well, I can buy a car. It might be a $25,000 vehicle. My payment's 350." But what they don't know is their term is maybe 7, 8 years. So they actually aren't paying down the car. So then when it becomes a liability, when they are either unable to make a payment or want to get out of the car, they are in the proverbial upside down moment. Oh, well, my car is worth less than what I owe. And how Car Putty differentiates that is we set the terms based on the best form of depreciation of the vehicle to try to lessen that burden of when you're paying down the car, you're not overextended or you're not underwater in that.
Cool. Well, I love that. I wanted to jump into some other questions that I had prepped for you, Joshua, and just kind of pick your brain with someone who has a lot of experience in this industry and really understands like auto ownership and financing. Wanted to ask you a few of those questions that I had queued up. The first one is, why do you think so many people end up in like severe debt because of their cars?
Yeah, two main reasons is what we see. One, they bite off more than they can chew. They go after that payment and they overextend the terms. And now, a year or 2 years down the road, they can afford it and they can't get out of the car. The second situation that we see is a lot of traditional lending allows for overextension of the value. So back to the $20,000 car. Let's say the car is worth $20,000. Some banks will allow you to have debt up to maybe $30,000 on that car, full knowing that that car is not worth what they financed it at. The industry term is rollover of negative equity, right? So a lot of people, just keep rolling it over, rolling it over. Next thing they know, they're making a payment on a car that's worth half of what they owe, and that's really bad.
Yeah, that sounds very bad. So, yeah, it sounds like really Carputty's magic is in just taking the traditional process and kind of using more modern tools to help people figure out better financing options.
Correct. I'll give you an example of a real life story. There was a young lady in our early times of car putty that she was a nurse, new nurse out of college, and she was trying to refinance a Volkswagen car that she had owned, and she didn't know that she actually owed less than what it was worth. So she was actually in a good position, but the payment was very high. Well, the reason why it was very high is the dealership or the person they purchased it from talked them into a very, very short term loan, thinking that was the best thing for that consumer. Well, all we did was refinance it to a standard term to where she wouldn't be underwater, lowered her payment by like $200 a month, and she was living a much better life because her debt load was lessened. So that's an instance we see a lot.
So it sounds like you guys have the opportunity to help people refinance and then their monthly payment goes down significantly and it just makes it easier for them to manage not only that car loan debt, but other debts that maybe they have incurred.
Exactly. We also offer, buying out a lease. If you're stuck in a lease, which a lot of people do when they want that low payment, at the end of their lease, they don't know what to do with the car. We can actually, in really layman's terms, refinance them out of the lease. They call it a lease buyout and keep the car and extend out the terms a little bit more based on the value and lower the payment as well on that vehicle. So they're in a better situation for even longer term.
Gotcha. So I know you've already kind of touched on this a little bit, but what exactly is the difference between, a traditional refinancing of a car loan or even purchasing or buying out a lease versus using Carputty's Flexline or Flex loan products?
That's a really good question. So traditionally, it's transactional. Every time you want to do something, it's a new application, it's a new credit pull, and it's very cumbersome to get done. It's kind of opaque. You don't really know what's happening until you get the kind of final results. What CarPutty has done is we've taken all that to the front of the experience, so you know exactly what you're getting before you actually transact on any vehicle, whether it be a purchase or a refinance. And it's with the Flex line, it's lifelong. So once you're a Car Putty member, you never have to go through that application process again. So no matter if you're buying, selling, or refinancing cars, it's one account for life and one platform for life. I believe we might have a frozen moment. And we have lost Hannah. Appreciate everyone for sticking through some technical difficulties. And she's back.
Hey, Joshua. So sorry about that. I was
No
having a
worries.
connection issue with my Wi-Fi. Um, I'm so sorry to leave you hanging there, but
It's
I think
okay.
you're in the middle of describing the difference between a traditional refinancing of a car loan or buying or just regular buying a car outright or versus like buying it through a lease versus, using Car Putty's products like Flexline and Flex Loan. I
Yeah.
missed you at the very end of your explanation. So
No, I'll restate. So the biggest thing is being sticky to a product. We allow a lifelong product through our dashboard and through being a member of CarPutty, where the consumer doesn't have to retransact. It's we consider all of our consumers members and members for life. So no more multiple applications. No more redraw of hard credit pulls over and over and over again. It's really just one platform.
So it kind of consolidates all the different, like, aspects of buying out or of purchasing a car, refinancing it into one place.
Correct. And with a flex line, you can actually do multiple cars. So if you're a household where you have, yourself, your partner, kids, you can actually put all the cars on one flex line. and make one payment. And then with a flex loan, if you're a little bit credit challenged, or if you're looking just for a transactional loan, we even offer that. So it fits the wide genre of people in market. And then using the V3 tool, you can actually measure like your performance for that vehicle. So again, back to the when do I buy, sell, or hold my asset that I have? Because for most people, especially ones that don't own homes, their car is their largest asset value wise.
Yeah, and it seems like it would be really helpful, especially if you own more than one car, to have be able to put it all on like the same payment structure with the flex line. Is that right?
It is. I mean, from a balancing of your own personal budget, it's nice to make a single payment. That way, you know exactly what's coming out every month.
Gotcha. Well, another question I had was like, how can consumers avoid, getting super behind on their car loan? Do you feel like CarPutty helps people avoid those situations?
Yeah, there's always instances where, hey, I've had an emergency, right? Whether it be a natural disaster or, loss of a loved one or loss of a job. So forbearance is always, key in that, and is being upfront with the lender, no matter if it's Car Putty or another bank. Being upfront, say, hey, I'm not behind now, but I may be. What options do I have? Don't wait until you miss two payments and then try to ask. You're not going to be seen in the same light. Also, always ask for, before you come behind, can I refinance? Can I, if it's my income has been reduced, can I refinance to a slightly longer term to where I can have a lower payment but still keeping in mind you don't want to extend it so long where you're underwater in a year or two. So it's really, again, communication with your lender and knowing your situation.
Gotcha. And what would you say, like, how exactly does V3 valuation work, especially in helping people manage their debts?
Yeah. So the way V3 works is unlike traditional, like looking up what a car is worth. I won't say this website names, but we all know them. It's a moment in time. So what's my car worth right this moment? Um, Also, it's kind of a multivariate valuation. What's it worth to a dealer? What's it worth in the private market, or what's it worth retail? Well, no one knows exactly what that means. Value is what someone's willing to pay you in cash at, today. So what we've done is we've forego all of that and we give you a cash value of the car in market. And it's through time, past, present, and future. That's why we have V3. The three is past, present, and future. So you can actually start gauging of like, what's my car's performance? What's my asset's performance? And every car is different. So we have a lot of our consumers that go online, weekly, monthly, and look at like, okay, what's happening in the future? Should I hold this car? Should I sell this car now before it hits a big dip? And we actually give to our car putting members alerts to say, hey, in 6 months, we foresee a pretty big dip in this car. You might want to start looking at either trading it in or selling it now to miss out on that.
So how do you guys like make those predictions, I guess?
So that's a little bit of our secret sauce. We use a lot of AI machine learning. We also look at cars as a whole, unlike traditional value systems that look at transactions. We look at what's in market, what have they really transacted for, and length of time in market, really as kind of bookmarks of what's this car doing today and in the future, because it's very fluid. And a lot of it is macroeconomical, with EVs going up and down. We have to be able to show consumers that fluidity of value.
Cool. And how often would you say like your predictions are end up being like accurate?
Well, I mean, selfishly, I'm going to say they're very accurate 99% of the time. We have certain other partners that utilize our data to show values. A lot of our secondary market purchasers of loans look at our values as the secure way of knowing what the risk is for that car. So we spend a lot of time. This is something I've been working on for over almost a decade now. So it's a pretty nice piece of technology.
That's amazing. You guys are predicting the future. I love it.
Trying to.
Cool. Well, how can somebody decide if buying, leasing, or refinancing is the best option for them? Like, what advice maybe would you give for someone considering between those three options?
So, owning the car is always, in my opinion, right, the best way to do it, right? Because you own the asset outright, and it's not predicated on how much you drive it. Like a lease is like, okay, you have terms. You can drive it this amount, you can hold it for this amount of time, and you have to give it back or buy it out. And then obviously refinancing is really good if, again, you have value in your car or you need to make a decision to change payment due to life circumstances. It's a good way as well, or taking advantage of the rate market. Rates do change, and they've definitely been very fluid over the last half decade. So taking advantage of either rates going down or holding steady is always a good idea as well.
Yeah, it seems like owning is typically, like, the best option, though. I would second that for sure. Let's see. So I'm gonna go ahead and move on to some questions that were submitted to the debt hotline. For those listening, at the debt hotline, we have a phone number that you can call in and submit your questions about debt. That number is 801-613-8181. For anyone listening, if you have any questions about debt, it doesn't have to be related necessarily to cars, but any debt related questions, you can call that number, leave a voicemail, ask the question, and we answer these questions live twice a week. So, with that in mind, I did want to ask a few questions that some real people submitted to the debt hotline to you, Joshua. So, the first question comes from Rachel in Texas. Rachel says, I've been paying $650 a month on my car loan for almost 3 years, and I still feel like I owe almost the same amount. Why does it feel like I am not making any progress?
Uh, Rachel, you're definitely in a common boat. First thing I would look at your terms, right? And when I say terms, how long is the loan? It's usually done in months, so 60 months, 66 months, 72 months. If it's anything over, say 72 months, I would definitely question, like, can I refinance that? Because it will take a very long time to pay down that car. You're paying more towards interest for the first 3 years than you are the actual principal of the vehicle. So definitely look at that, and try to refinance if possible.
Do you think that maybe someone who's stuck in a loan that's more than 72 months, is it possible for them to refinance through Carputty?
It is possible. Again, we have to look at vehicle by vehicle and instance by instance, but we have a lot of people that come from long-term loans and finance down into shorter terms. Again, it depends on the goal of the borrower. But anything longer than 72 months is definitely a red flag, in my opinion.
Gotcha. And why would you say it's a red flag?
You're extending out the interest payment. So you're paying interest on that car front loaded, right? It's usually daily simple interest. So that means, I mean, every day it's grabbing interest by the current principal. So you're not actually ever paying the principal down enough. Now, if you're you know sound enough as far as understanding how this works, and most people aren't, it's fine. You can make things like double payments, principal only payments, and then still have that longer term loan. But you have to be very mindful of when and how you're doing that. It's usually not someone's first thought of like, oh, I can make an extra payment and reduce my principal. So again, anything over 72 is really because you're front loading that interest.
Gotcha. Yeah, I think it's good, like, when you're signing up for or when you're, reviewing your contract for a car loan to just be sure you understand, like, how much you're gonna end up paying in interest over time. I didn't know that anything specific. I didn't know 72 months was, like, the sweet spot for, maybe, like, the ideal kind of contract term or length.
I wouldn't call 72 ideal. Again, opinion. Really
Mhm,
anything over like 60-ish months to me is five. Anything over 5 years
mhm,
is starting to get questionable. So I'll give you a statistic. The majority of Americans keep their car 2.5 years. So if you're buying a car knowing that you're going to trade it in 2.5 years, does having a loan for 6, 7, 8 years make a lot of sense? And 99% of the time, the answer is no.
mm,
But people get bright-eyed and bushy-tailed when they see a pretty new car and like, "Oh, I've gotta have it." And
mm.
then the seller is like, "Hey, I can get you this car for your desired car payment." And next thing you know, they're upside down or in a bad situation. So biggest thing is, to your point, know exactly what you're getting into. And sometimes, having a car that meets your needs is much better than getting the car that meets your wants and being in a predicament, 2, 3 years down the road where you're stuck.
Yeah, I agree. I tend to have the opinion that your car should be more functional than fashionable. As long as it can drive, I think that that matters most in my opinion, but I know some people, love their cars, love the brand, all that stuff. So it's tricky, but I do think reviewing your contract carefully makes a huge difference. So,
No, and I agree with you. Loving your car is completely fine. I love my cars. I'm a car nut. Um, but you can also see value and appreciation in even some used cars. I call them pre-loved cars,
yeah.
and have that be yours. You don't always have to buy a new car. Myself, I actually haven't bought it. I haven't purchased a brand new car in years because the value and what I've seen. This is actually through building the company. I appreciate more, value towards, someone's image.
Yeah. I love that. And so like Joshua, you mentioned you love cars. You know, and as someone who does love cars and drives, can you tell us a little bit about why you decide not to buy new?
It's a personal opinion. I see cars as assets, much like my stock portfolio,
Mhm.
and I enjoy seeing what cars do in the market. I mean, there's a lot of really cool cars out there, and even some that are 5, 6 years old that are still amazing vehicles. And unfortunately, the way the market works here in the U.S. is you have a sharp depreciation of the first, usually a year to 2 years. So I can find a car with very low miles and all the features that I desire and looks really good. And, even sometimes a sports car that can cost upwards of 20, 30, 40% less than if I bought it straight from the manufacturer. Now, buying a new car is not bad because, if you want to personalize it and it's your car, it's your baby, and you want it a certain way, you want that, particular yellow with tan interior, by all means, look at new cars. But it depends, again, on your circumstances and your desire for your asset.
Cool. Well, let's go to another question. This one's from Daniel in Ohio. So Daniel asks, I owe $28,000 on my car loan, but the car is only worth 22,000. Is there any way to refinance or restructure so that I'm not so far underwater?
Short answer is always. If you owe more than the car is worth, there's a couple options for you. If you're able, you can take out a small personal loan, or if you can take out maybe some savings to buy it down. Most banks will lend you a little bit over the value in a refinance. So you may be able to refinance all of it, but I would definitely look at shortening the term to your maximum allowable payment. So if you can afford 450 bucks a month based on your budget, make sure that it's the shortest term to get to that, to again pay down the principal as fast as possible. But yeah, there's usually always a way for that.
All right. Next question comes from Lewis in Florida. So Lewis says, my credit score is in the low 600s. Is refinancing even an option for me, or am I stuck with my current interest rate?
That could be a maybe. So I say maybe because we do offer the Flex loan product for the low 600 FICO scores or credit scores. But it's not just based on your credit score. We look at a lot of things, right? Of your payment history on the car. We look at your savings, how much money you have in the bank. We look at a lot of different options or statistics based on you to risk you as a buyer, as a refinancor. So yes, there is definitely ways to get around that.
So to this point, and I don't know if you have this information handy or like off the top of your head, Joshua, but what would you say is like the typical credit score of users for Carputty? Do you know?
Oh, it ranges. Again, we've seen people all the way down into like the low 600s, all the way up to 810. So it really depends on the person and their intent, and our products match that. So if you're a high FICO borrower, we have extremely low interest rates and ease of use to use our Flex Line and Flex Loan product. If you have a little bit of challenge credit, we usually have some type of way for you to refinance or purchase a car as well.
So it's nice to know that, you don't have to have like the most stellar, incredible credit score in order to access tools like Carputty. Um,
Correct. Yeah, yeah, we are a platform and a tool. We're here for the consumers to be transparent on what they can and cannot afford. So, yeah, by all means.
well, I love that. Okay, well, our next question comes from Jessica in California. Jessica says, I want to buy a second car for my business, but I already have $15,000 left on my current car loan. What is the smartest way to handle this without going deeper into debt?
Well, I'll bring up a key point. Not all debt is bad, and especially if you own a company or you're running a company, debt can be utilized as a good thing. With the Flexline product, we do offer small business loans that are backed by the personal guarantor, usually the business owner. So you can actually, have that in your business name and utilize that for tax purposes. I'm not a tax consultant or advisor, but speak to one because there's advantages of having that as debt. So by all means, yes, you can. And going deeper in debt, just buy smart. I tell all the business owners we work with a lot with a company called Turo, and the Turo hosts who own the cars, they're incredibly intelligent people. So they'll buy minivans or small trucks because it's best for their business.
So it sounds like, doing something like that might be best if you own a business. What if like for in Jessica's particular example, she owns 15,000 on her current car loan. But it sounds like she is a business owner. What if she wasn't a business owner though?
And try to buy a second car.
Yeah.
Yeah, I mean, still can use the Car Buddy platform to buy a second car as long as she can afford it or he. So that's by all means, we look at your ability to repay and your willingness more so than just a statistic that you have as a credit score. So by all means, and with the Flex line, it all goes down to one payment. So even though she has multiple cars on one Flex line, she still make one payment every month.
Yeah, that sounds nice to be able to just consolidate it all into the one payment. I love that. All right. Well, I think we've got time for one more question if that works for you, Joshua.
Of course.
Um, this last one comes from Andrew in New York. Andrew says, how do I know if refinancing my auto loan will actually save me money in the long term?
Very good question. And actually, you hit this earlier with looking at your overall, financed amount through the term. How much are you paying in interest versus the principal? So when you look at refinancing a car, obviously lowering a payment is nice. But if you're lowering a payment but paying a lot more in interest, you might want to take that into consideration. And saving money long term, look at shortening the term of that loan. So after, say, like you have 5 years left, if you're able to afford a 3-year loan on a car, after that third year, now every time you were to make a payment, you can take that money and put it into a high yield savings account or into the market. So that way you're actually having your money make money for you. So that's how I look at it as saving money long term.
Do you know of any like good tools to help people kind of review their contract or their auto loan and before they sign to understand how much they'll actually be paying over time?
Yeah, well, we do. So, that's one thing. One of our key morals of the company is transparency. So, one of our customer service, managers can obviously go through both our contract or a contract you currently have and show that to you, show where that's at. Um, but I'm sure there's other, local bureaus that will be more than happy to do that as well. I'm sure some that you may know through the debt hotline. So, and solo.
Yeah, I know. So I actually recently bought a car and I was trying to figure out like how much to put down on my monthly payment, like if I should pay a little bit more every month to kind of, you know, I guess tap into that interest and, not have to pay as much over time. And I actually just ended up asking ChatGPT and it gave me a pretty good answer. So there's all sorts of resources and tools out there. But what I love about CarPutty is that it kind of consolidates all these tools and resources into one place and you get access to the refinancing options. But you also get like added help in trying to manage your auto loan debt and figure out how to best leverage it.
Exactly.
And I love that one of your mottos is transparency. That's super important. Well, cool. Well, I think we'll go ahead and wrap up. But for anyone listening, if you're interested in looking at refinancing options for your car, head on over to carputty.com. And Joshua, do you have any, I guess, last words or anything you'd like to say about the topic of cars and debt and managing auto loan financing, all that good stuff?
Yeah, always have options. One thing I tell all my friends and family is, if you see a car you love, that's fine. Go drive it, but go drive three more. And you never know what you might find in market, and it might be a better value for you and what you're trying to do as a consumer.
That's great advice. Drive 3 more before you sign the papers. I love that. Well, yeah, for anyone listening that might be struggling with debt, especially if it's, other types of debt, credit cards maybe, or personal loans. If you've gotten to a point where if things feel unmanageable, Solo is also a good resource for you. You can use Solo to negotiate with your creditors and settle your debt. And if you've been sued, we can also help you respond to the lawsuit, and represent yourself without having to like spend a lot of money on hiring an attorney. Our tools can help you represent yourself. So I just want to say thank you so much, Joshua, for joining tonight, for sharing your expertise and telling us a little bit about Carputty and how it works. Again, for anyone interested in exploring their options for auto refinancing, carputty.com is a great resource and service. And yeah, thank you so much, Joshua, again for joining.
Thank you, Hannah.
All right, everyone. Thanks for joining and listening to the Debt Hotline. And just know Solo's rooting for you. We want to help you resolve your debts. So head on over to solosuit.com if you have any questions about debt. And you can always give us a call at the Debt Hotline at 801-613-8181.